This is going to be an introductory video for many of you, and we're going to be going over what exactly support and resistance is from a conceptual standpoint, and then we're going to be moving forward and taking a look at what it actually looks like in a real financial market, how you can spot it, mark it up, and then use it to trade. And this is going to be an introductory video for the entire series of videos on support and resistance. Now, I've got us pulled up on Euro JPY, but before I can take you all into the actual market, we have to take a look at what support and resistance is from a conceptual standpoint. So I'm going to pull us out of the market for a second so that we can take a look at that. All right, so I want you to imagine that you are in a hallway. So here is our hallway right here. All right, we have our floor right here. And then we have our ceiling right here. All right, so we're walking down this hallway, and I want you to imagine that you're bouncing a bouncy ball down the hallway. Okay. Now, I want you to imagine that you bounce this ball against the ground as hard as you can. So you throw the ball at the floor. When the ball hits the floor, what is the ball going to do? Of course, it's going to bounce up, and because you bounced it really hard, it's going to bounce up all the way to the ceiling. Now, the ceiling is stronger than the ball, and what's going to happen is when the ball hits the ceiling is going to repel the ball all the way back down to the floor. And if you bounce the ball hard enough, it's going to keep going back and forth until the end of the hallway. So imagine that there is an open door right here at the end of the hallway. And when the ball reaches the end of the hallway, it bounces right out the door. And because there's nothing left to repel it, it bounces right on up past the ceiling and continues on to the upside. This analogy of you walking down a hallway and bouncing a bouncy ball against the floor and the ceiling is synonymous with how price moves in the financial markets between support and resistance. So what we're going to do now is we're going to change the word floor to support. And we're going to change the word ceiling to resistance. And what we've got now is price moving in between support in the market and resistance in the market. So what happens is price will come down to a level that has historically acted as support that price then bounces from all the way up until it finds a level that price has historically rejected from. It's been held at. And then from there, price moves back to support. And thus you have the saga in the financial markets where price is consistently and always moving between some kind of support or resistance at all times. So if you can understand this conceptually, it's going to help you tremendously on your trading journey to understand that at any given time in the financial market, no matter what pair you have pulled up, no matter what day it is, what time frame it is, what you're doing, price is moving between some kind of support or resistance. Now, there are a lot of different kinds and categories of support and resistance. In this series specifically, we're taking a look at horizontal support and resistance. But what we're going to see at a later time is that there are many different types. So just to clarify, in this video, we're looking at horizontal support and resistance. And when we say support, what we're talking about is a level in the market that has historically supported price. And when we talk about resistance, what we're talking about specifically is a level in the market which has historically rejected price or pushed price down. So this is fundamentally what support and resistance is. Now let's go back into the market and see if we can identify real support and resistance in action. All right, so now we're back on Euro JPY. We're going to look at applying that information to the real charts. So let's start off over here on the left-hand side of the chart and take a look. Do you notice how over here we have a peak in the market? So we were rising over here all the way up into this area, and then we began to fall. That's a peak in the market. Price came up to this point and rejected several times. So let's get rid of this. Let's circle this area here. And then let's make note of this right in here. All right, this was some kind of resistance over here. Now we continued down at that point. So once we found our resistance here, we continued down. And from this point right here, we had a valley in the market. Price rose from here. It did a few things in the meantime. It came back down to this same spot, rose back up, came back down to the same spot, rose back up all the way to our resistance right here. So what we're going to do is we're going to note this valley right here where price found support. We're going to note this valley right here where price found support. We're going to note this valley right here where price found support. And we're going to get rid of this. And we're going to add another line down here. Now notice that price found support once, twice, 3 times. Okay, so what we've got down here is a support. All right, and we will put this here, put this over here, and pull this over here. All right, this is our support line down here. All right, and I want you guys to ignore everything to the left of this for just a moment. We're going to get back to this in just a moment. Focus on these circles and understand the concept here, just the simple concept of support and resistance. And over here, where we found resistance, and it's one big circle, but really, if you look, there's 3 arrows here. We bounced once, twice, 3 times, 4 times actually, 5 times. There's a lot of instances in here of resistance. So we're going to now call this our resistance. Okay, so often here we've got our hallway here, our 2 blue lines. That's our hallway. We've got our bouncy ball right here, and what's the bouncy ball doing? Comes up to the resistance, comes down to the support, comes up to the resistance, comes down to the support, comes back up to the resistance, comes down to support, comes back up to the resistance, etc. Just like we had talked about before. Price is simply moving between this resistance formed here and the support formed over here. And so sure enough, over here on the right-hand side, when we come back up to our resistance level, what does price do? Of course, it falls from the ceiling back down to the floor, just like that. And then, of course, once we're at our support, what does price do? Finds support, continues to rise from this area all the way back up to our resistance over here on the right-hand side. Okay? There we go, right there. Okay, so this is a basic understanding of what support and resistance actually looks like in the market. Now I want to take us back out of the market for a minute to explain some more details about support and resistance that will help us in understanding how they actually work and how we can use them and identify them in the real markets before we carry on here. All right, so we're back over here at our conceptual example where we've got price moving in between support and resistance in the markets. And what we're going to talk about now, some characteristics of support and resistance. So, characteristics of support and resistance. So the first thing that you need to understand is that support and resistance are not actually different. They're actually the same. The only difference between a support or resistance is actually just simply where price is. Because, and this is important, so make sure you take note of this, when support breaks, it becomes resistance. 2, when resistance breaks, it becomes support. Okay, now what does that mean exactly? So let's come back to our conceptual example. Price was moving in between our boundaries, in between our floor and our ceiling, in between our support and our resistance. But then at the end of the hallway, when the door was open, there was nothing left to push the ball down, and so it bounced straight through and above the ceiling, made a higher high. Once price breaches a resistance, so when this breach takes place right here, this level right here is no longer acting as a resistance. Now what's going to happen is that it's actually going to act as a support. Because now that price has breached the resistance and is now above the resistance, price will come back down and it will act as support. And a new resistance will form somewhere up above somewhere else. And so we will end up with different boundaries now, like so. This is how it works. So let's go back. Now similarly, when price breaches a support and is now beneath the support, that support is now going to act as resistance. So we will end up forming a new support, and our old support will now actually become our resistance. So when we talk about support and resistance, we're not talking about support or resistance. We're talking about support and resistance, because in all actuality, this support down here is a support and a resistance. This resistance up here is a support and a resistance. The only thing that determines whether the support or resistance, or in short, S&R, that's what many traders refer to support and resistance as S&R. The only thing that determines whether an S&R is acting as a support or resistance is simply just noting where price is relative to your S&R. So it's pretty simple. If we go back to our original hallway example, if we take price and we move it over here, this support and resistance level right here will be support. Also, this support and resistance level down here will be support because it is also beneath price. So when price breaches this support is still beneath it. It can still find support here. However, if price is in the middle, this support and resistance level is support. This level is now resistance. And if price is down here, This support and resistance level is resistance, as well as this support and resistance level. They are both resistances. They are both above price. Price may come up, find resistance. If it breaks through it, it will come up and find resistance. They are both acting as resistance because they are both above price. Now, there is one other important thing that you need to understand about support and resistance, which is that support, and we're going to call it SNR for shorthand, and you're going to hear that a lot moving through the rest of the material in the education platform, is a zone, not a solid line. Often depicted as a solid line, though you must understand conceptually, it is actually a zone. And we're not going to get too far into that in this video specifically, because we're going to save that for a different video to really detail that out, but still worthy of noting here for our key characteristics of support and resistance. So now that we've covered some of these really important concepts about support and resistance, let's go back into the market and see what that looks like in the actual chart. All right, so here we are back to our previous example, and earlier I drew this box over here and said, don't worry about that, but now we're gonna take a look at that. And so let's just come on over into this area. Now, the first thing, you see that not exactly, there's a little bit of a gap here, but as price came up to this zone, which we'll talk about in later videos, we saw that price did what? Price came up to the resistance, because keep in mind we're below the level, and then dropped. And then price came back up to our resistance and then dropped. And then price came back up to our resistance, dropped, and then finally broke through and then went on to create a new resistance in the market. But what's important here to understand is that this level that we earlier identified is a support level over here. Previously, it was acting as what? It was acting as resistance. Let's get rid of these blue markings here and this arrow. So here we have our first example. What started as a resistance level then became a support level once it was breached, which is why all of these levels are called support and resistance levels. Over here, we have a resistance in the market. Let's see what happens when this level is breached. Here we go. So price breached through our resistance, came back and found support, and then went on to a new resistance. So you can see here again, yet another example of resistance turning into support. Now this is constantly going on in the markets, and if we come back over here to our main hallway, our main ceiling, our main resistance in this example, and we start to take a look, there are other support and resistances that we can look at. So for example, there was a support right here in this area. So we have a support. And then what happened, the support breached price. You see the green candle here in the wick came back up. And then what was previously support then acted as resistance, and we fell. So right here, we have resistance. And then note this, look what happens when price gets back up to this level. So again, we see what was once acting as support is now acting as resistance. You can see it again down here, another example. You have resistance right here. I have a resistance right here. As you can see, price came up to this point. Let's get rid of this blue line here. Price came up to this point and then dropped very hard. Now, the next time price came up, found a little bit of resistance, but ultimately it broke through. Now, when it broke through, what happened? It came back down, and now this level acted as support, and then we come back up to our next resistance. So here we have support. Now, this video was designed to give you a conceptual understanding of support and resistance, how support becomes resistance, how resistance becomes support, how they are in fact one and the same. And the key takeaway from this video is understanding how price moves specifically between horizontal support and resistance. About it previously, and I'm sure many of you have heard about the concept of support and resistance before in the financial markets, but the purpose of this video is to actually show you why support and resistance forms. That way you have a deeper confidence in what you're actually doing in the financial markets, and that's going to improve your trading and overall profitability. So we are going to end up in the charts a little bit in this video, but of course, before we do that, I'd like to take us right on out. All right, so let's say we've got a resistance up here at, let's just go ahead and type this in here. Normal 2 coordinates, let's say 1370, right around there. So we have a major resistance at 1370. Now, we've got price is moving along, comes up to our resistance and falls. Comes up to our resistance and falls. And yes, of course, there's a support down there, but right now, I want you guys to focus on this resistance. Comes up to the resistance and falls. Now, here's my question to you. What causes support and resistance? What causes price to come up to this seemingly random level in the market and continue to find resistance and bounce away? What is it that's causing that? So I'm going to give you a couple seconds, think about it, think about some ideas, maybe pause the video for a second. The answer to what's causing support and resistance in the financial markets is supply and demand. Now, supply and demand is the underlying factor that drives every single piece of technical analysis, every single price movement. It's the reason for everything. People may see something in the market and blame it on news. They might blame it on politics. They might blame it on a technical analysis pattern. They might blame it on buyer sentiment. At the end of the day, every single move in the financial market is due to supply and demand. And it's so important that you understand this from a conceptual, fundamental basis. That way you can grow from this and truly understand what you're doing, because most people, especially when we talk about retail traders, they just don't have the grip on the market that they need to be successful. So support and resistance is caused by supply and demand. Support and resistance is supply and demand. They are actually the exact same thing. So what exactly is supply and demand? How does it play out in the markets? All right, so first I want you to imagine that there's a large investment bank. So there's an investment bank, and this investment bank needs to move $100 million. All right, now when you have that kind of transaction going on, you can't just place $100 million of order at one time. So what they have to do is split this order up into several different orders. So instead of placing a $100 million order, they may place a $20 million order 5 times, or they may place a $50 million order or a $10 million order and split it up into smaller pieces. The reason why they have to do this, so let's go ahead and pull out our line tool here. And let's just say that right here at 1340, let's go in here. So 1340, and make this our, here we go. Right here at 1340, they want to fill this order for 100 million, okay? So the way this works is price will be moving along here in the market, and then it'll reach the 1340 level. And when price reaches the 1340 level right here, part of this order is going to get filled. So let's say overall they want to fill 100 million right here. Let's say they had an order for 25 million. All right, they had an order for 25 million. Now when this order actually fulfills, what's going to happen is it's going to cause price to shoot up. All right, so when they click buy for $25 million, it's going to cause the price to rise because there's more demand caused by this investment bank. Guys, one thing you have to understand, and we're going to dive a lot more into this. It's honestly more advanced than you need at this point, but general concepts here, the financial markets are controlled by large players, by key participants, institutional investors that have so much money that it causes the value of assets to change. So when they place an order for $25 million, price rises. Let's say price rises up right to this area. Okay, so price rises. So price rises up to here. Now, here's the question. When price rises up to here, when price rises and we're up to here, are we down here at 1340 anymore? No. So what this is called is, go ahead and pull this over here. This is called slippage. So slippage occurs when you carry out a transaction that has so much volume that it actually causes the market to move. It causes price to fluctuate away from that point. And so when that happens, the institution has two options. Either they can continue to place orders or they can wait for price to return down to their original price point that we've got marked of 1340. Now, remember and keep this in mind, okay? This is very important. When you talk about like a 5% increase for $100, okay? 5% increase on $100, you're paying an extra $5. So in that case, you might be okay with that markup. But in this instance, when you've got $100 million on the line, a 5% markup is $5 million. So when you start scaling money up to this level, these investment bankers, they can't afford, okay, these hedge funds, they can't afford to continue to fill their orders once slippage has occurred. So that's why they have to split their orders up into several different parts, because it would cause a volatile push in the market, and a lot of their order wouldn't get filled at the price point that they need it filled at, and therefore they would lose a lot of money. So this is the underlying driving factor for actually why support and resistance forms in the first place. So here we go again, price is up here. And now keep in mind, our investment bank has another order down here for $25 million. Again, they can't just fill the other $75 million because that would be too much. It would be too much slippage. They'd lose too much money. Price would rise all the way up here, and they would get, have to fulfill another 40 million up here at a much higher price point, and they'd lose a ton of money. So here's what's going to happen. Price will ultimately come around, and then boom, it will find this level again. When price reaches this level, what's going to happen? This order right here, this $25 million order is going to get filled at 1340. When that order gets filled, it's going to cause price to rise. When $25 million of asset is bought, it will cause the value of that asset to rise. Price will do its thing, and then when price comes back down, what happens? Another $25 million is filled right here. It's orders filled right here. Okay, so each time price reaches this level, it's filling orders. Now watch what happens, because this is interesting. So we get one more order fill here. Let's go ahead and mark that right here. Okay, we get one more order fill right here. Now notice how at this point we've got $25 million times 4. That's $100 million. So the entire original order that this bank put for the market right here, it's all been filled. So they're done. They're good to go. They have no more orders waiting here at 1340. So what's going to happen now? So price is pushed away, right? When this $25 million order is filled, it pushes price up. What's going to happen now when price returns to this level? There's no more buy orders there. So now what's going to happen is price is going to break this level, retest, and then continue down. So this area down here, I'm going to get rid of this, get rid of slippage, get rid of this. Okay, now these orders down here have formed what we typically call support. Okay, this is what we would call support. Now that makes sense, of course, right? Prices come down, it's found support here, it's found support here, it's found support here, it's found support here, and it's retested as resistance here. So it makes sense based on our understanding of support and resistance why this is a support. However, now you understand why this support level in the market is actually forming. So what I'm going to do is I'm going to change our word support to demand. Let's move this right over here. And then I'm going to change all of this to green. All right, now why did I change all of this to green? The reason why I did that is because I'm going to go ahead and move this down here now. Support is equal to demand, which is equal to buyers. So anytime you hear the word support or demand, you need to think buyers. There are buyers in the market. So in this case, right here at 1340, we had a buyer in the market that kept pushing price up. Every time price got there, there were buyers there ready to push the price up. When you buy, the price increases. Now, that's support. That's demand. What about resistance? What about supply? Well, same thing, just opposite. So we've got our level up here now, and we're going to make, this time we're going to make this red to indicate sellers. Okay, so that's the idea, color coding this here. Green is for our buyers, red is for our sellers, and they are pushing the market back and forth. So again, similar situation here. We've got sellers here, sell orders filled here, sell orders filled here, sell orders filled here, and sell orders filled here. How much? Who knows? Doesn't matter. This could be 10 million. All right, this could be 5 million. This could be 70 million. It doesn't really matter. What matters is that you understand the concept of what's going on here. You don't need to know the exact amount. You just need to understand that every time price gets up to this level, okay, so in this case, let's say it's 1360. There we go. So every time price gets up to 1360, sellers are coming in. There's sell orders there. They have pending orders ready to be filled. Because remember, our institutional seller up here that has to move $20 billion can't do all of that in one order or two orders or three orders due to slippage. They have to split that up contractually into separate orders with their brokerage, and then that brokerage will carry out those orders only within a set defined parameter of price. That's what gives these support and resistance zones. All right, so just remember, these guys up here who have these sell orders at 1360, they've got a lot of money on the line. They cannot afford to have their orders executed right here or right here, okay, right here. They need to wait for price to come back up to 1360 so that they can continue to get their orders filled at the correct price. All right, and what's the result of these orders, this supply and demand in the market? You end up with support and resistance, inherent barriers in price, and you're able to accurately predict where the sellers are going to come in, where the buyers are going to come in, and where you too should be placing your trades. So up here we've got resistance equals supply, which equals sellers. Okay, so this is important for you to remember, take note of. Resistance, supply, sellers, okay? Support, demand, buyers. So supply, those are your sellers. Demand, those are your buyers. So price moves between support and resistance. Supply and demand is what creates that support and resistance. One more time. Supply, that's your sellers. That's the sell off. Those are your peaks. That's your resistance. Demand, those are your buyers. That's your support. Together, supply and demand move the market. Together, supply and demand create support and resistance. Now that you understand why horizontal support and resistance, because that's ultimately what we're talking about in this case, specifically horizontal support and resistance. Now that you understand why it exists fundamentally, let's talk about something else that's really important. All right, so I've cleared off the screen a little bit, and I want to ask you a conceptual question here. Let's say that you open up the chart and you are right here. So price is right here in the middle between your support, your resistance, between your supply, your demand, and price is approaching this supply zone. Okay, now here's the question. If you look back and you see that price has been here once, twice, 3 times, 4 times, and this is now the 5th time you are approaching the supply zone, do you think that because you have more bounces from this level that you have a better trade, or do you think that you have more bounces from this level that you have a worse trade? And I want you to think about this for a second. So pause the video if you need to, but I want you to really think about this. Do you have a better or worse trade? Are you ready for the answer? The answer is that the trade is worse. It's a worse setup. And here is why. The reason why it's a worse setup is because, remember, again, there is a certain number that's being filled here. Let's say 100 billion. So $100 billion worth of sell orders are right here at 1360 on the chart, okay? Now, each time that price is visited up here, a part of that has been filled. Now, you don't know what part of that was filled each time. But right here, part of it was filled. 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 And now here we are. And the question is, let me get rid of the billion here. The question is this good or bad for us? Get rid of that. The answer is it's bad, because at this point, we've already visited this level so many times that each time we visit this level, okay, write this down, take note of this, is very important. Each time we visit this level, it becomes more and more likely that all of the orders are going to have been filled. It becomes more and more likely that there are no more sell orders remaining, it becomes more and more likely that this level will break and price will continue on as if it didn't even exist. Why? Because all the orders have already been completed. It goes against your intuition. You would think that the more bounces, the more verification you have for a level, the better it is, but that's not actually the case. You want to work on identifying these levels back over in this zone, back here when you only have a couple bounces. You don't want to be identifying the level all the way over here once it's already got 5 or 6 bounces. The orders are already filled and you're going to lose the trade. The one time you go ahead and decide to enter in on the trade, you're going to lose the setup. And again, this is something that just so many retail traders don't understand because this kind of information is not out there for people. People are taught that the more reactions you see, the better, and it's the exact opposite. And that's why so many people, that's why 95% of these people are losing money because they're taught incorrect information. And when you actually understand what it is that you're looking at on a chart, everything becomes so much more clear. So again, one last example on this. I'm going to clear the screen off. All right, let's go back to our demand zone down here. And let's say we've got $50 million worth of orders to fill. All right, now over here, when price originally got here, they were able to fill 20 million of that order. And then the second time that price got here, they were able to fill 20 million of that order. And then the third time that price got here, they were able to fill the remaining 10 million of the order. And then the order was complete. That was it. So after that, when price got here, there was nothing left. So what would that look like in terms of the candlestick? So let's delete these here. Let's talk about that real quick. So each time this $20 million was filled, price rose back up to 1360, our next supply zone. You can see that right here, and then you can see that right here. But this time they only filled 10 million because that's all that was left. So the question is, did price make it all the way back up to the supply zone? No. It was half the order, and so it went half the distance right here. So instead, in this case, price stops halfway in between, comes back down looking for more demand, more buyers, more orders to fill to push it up. And if there aren't any more orders, which in this case we have no more orders left to fill, what happens? The level fizzles out like it never even existed, and price will break it, retest, and continue on in the other direction. So I hope at this point all of you fully understand, at least from a conceptual basis, what's causing support and resistance, what's causing these horizontal lines that you're drawing on your chart to actually have weight so that you can have confidence in putting money on the line.